So, Naa Awaa, as the Deputy Director for Division of Housing Mission and Goals at FHFA, the Federal Housing Finance Agency, I'd love to know what that long, beautiful title means and what you do there.
Sure. So I have been at FHFA for quite a while. In this role, which I've had for the last 2 years plus, I'm in charge of oversight of the housing mission for Fannie Mae, Freddie Mac, and the federal home loan banks. So what that really means is any of their credit policies for both the single-family business and the multifamily business throughout the life cycle of the mortgage. So origination, servicing, default asset management. Also the statutory mission activities, the housing goals, their duty to serve programs where they're supporting borrowers in certain underserved markets. My team is responsible for that.
Excellent. And so two of the values at FHFA are fairness and accountability.
That's right.
What I'd love to know is how does the agency aim to address historic disparities in lending, specifically as it relates to Latino homebuyers, and how do you ensure that you keep in line with those values and making sure that there's fair lending out there and that you keep the enterprises accountable?
Yeah, I mean, this is something we're very focused on. As you know, as just mentioned, the housing goals are the way we've traditionally approached the mission activities. However, it was clear to us when this new director came into place in 2021 that despite all of those decades of affordable housing programs, there are still significant disparities in lending across different communities, and the homeownership gap is very significant. So based on that premise, we asked the enterprises to produce the Equitable Housing Finance Plans, specifically generated to look at equity. And those plans are taking a focus on, so when Fannie first published their plan, I think this in 2022, they focused on the Black housing journey, looking at obstacles and barriers to home ownership and to affordable rental housing. Freddie, in the initial plan, focused on Latino borrowers and Black borrowers. In the second year of the plan, Fannie added Latino borrowers as well. So both of them are looking at things like special purpose credit programs, down payment assistance, et cetera, to help encourage homeownership among underserved populations.
And what are some of the misconceptions that are out there? Because I know, a lot of times I'm a practitioner. I run a team a pretty big team of realtors, and a lot of times they don't know that these exist. It's either, for them, it's FHA or bust, right? Yeah. So tell us a little bit about what are some of the misconceptions that you see out there?
Yeah, I mean, there are a number of programs that people are not aware of. The special purpose credit programs are new, and those are really geographically based, but they're targeting majority minority communities with, like I said, down payment assistance, closing cost assistance. The other things are, you probably know this, there's still a misconception, I think. People think you have to have a really significant down payment. And we do have programs, Fannie and Freddie have programs for, the 97 LTV programs, Home Ready, Home Possible, the HFA programs. So there are a number of programs out there to assist, borrowers who are with lower wealth, right? There are also more innovative ways of underwriting, and there are things like their asset and income modeler for Freddie Mac and then for Fannie Mae, things that automate the income documentation process, which we know is very challenging. So I think if lenders can take more advantage of those programs, we may actually see slight increases in homeownership for certain populations with some of the new technologies out there.
Excellent. So now moving on to FHFA's vision. So it's to support a reliable, stable, liquid, and equitable housing finance system. Can you provide some more examples or initiatives, strategies of these plans that are specifically designed to promote equity in lending, specifically that last piece, the equitable, sustaining the equitable finance system?
Yeah, so I mentioned the special purpose credit programs. That's a central piece of it. But there's also a focus on education, and so more just counseling for potential home borrowers, looking at financial coaching, making sure that they're ready for home ownership. There's also a program, a really innovative program, which Freddie Mac is pursuing called Develop the Developer, where they are providing mentorship and financial assistance to developers who are investing in their own communities. primarily minority and disadvantaged communities, really getting that next generation to be much more diverse. Right, we're looking at things like the Appraisal Institute, the Appraisal Subcommittee. We are part of that subcommittee, and we worked with the National Association of Realtors and some other sponsors to put out, I think it was 700 scholarships for emerging appraisers. Again, trying to diversify that profession, which historically has not been very diverse. So a number of different activities that the plans encompass. They've been for 3 years. This is going to be the last year of the 3-year cycle, and then they'll provide another 3-year plan.
So in my market in San Diego, I know a lot of these special purpose credit programs are really, it's kind of like finding a needle in a haystack, right? The affordability is very low. So the barrier to entry there, the difficulties I see is that the majority of first-time homebuyers end up buying condos or townhomes. They can't afford a single-family home.
Yeah.
In San Diego, the median price is up to $890. So when you look at townhomes, condos priced in the $450 to $650, these condo projects need to be approved by FHA, and the majority, a lot of the condos in my area are not FHA approved. So when they try and qualify them conventional, if they have a lower credit score, the mortgage insurance just kind of blows them out of the water. They cannot go conventional. So we're stuck with finding maybe 2 or 3 condo complexes and we're waiting for somebody to want to sell to get 20 buyers that are qualified into those 3 homes. I know that I'd love to hear about the bi-merge credit reporting that is stated to be rolled out later this year, to see if that's something that can be done, or do you think if it will help maybe take other factors into account so that those people that maybe have a lower credit score, now we can show, hey, they are indeed creditworthy, and we're not just restricted to FHA loans.
Sure. So the credit score initiative, which had been going on, in research for several years, but FHFA announced, it was October, I believe, of 2022, that we were going to start down this path, where both enterprises have historically used classic FICO. And with classic FICO, they get a tri-merge report, so the reports from the 3 credit rating bureaus, and that process of taking 2 out of those 3, et cetera. So we recognize that there are more there are newer models out there that look at things like trended credit history, rental payment data, utilities, et cetera. And so for certain borrowers, it's a meaningful change in their credit score. So we have approved the transition to both, instead of classic FICO, having both FICO 10T and VantageScore 4.0. So that's one which we think will be a really meaningful change. The bi-merge was announced at the same time, and that's going from the 3 reports to 2 reports. So lenders don't have to pull all 3, you can rely on 2. Now the process of figuring out which 2 reports, and once you pull those 2, which score you use, is something we're working on. So we're trying to engage the whole industry, get your feedback on what works. But in addition to something like what I just mentioned on the credit score, which it will take a while for that to go into effect, but we also have things like rental payment reporting, which is another initiative under the Equitable Housing Finance Plans. Recognizing that for many renters, that is their most significant expense, and historically, that had not been part of the credit score models. So what the enterprises are doing now is they can actually pull some of that rental data. They look at your history of rent payment and factor it into the underwriting process. They also have initiatives with the Equitable Housing Finance Plan incentivizing landlords to report positive rental payment to the bureaus to help improve people's credit scores. And so we're seeing really positive results from that, where a number of borrowers people have established credit scores, or their scores have been improved because their landlords are reporting that they're making timely payments. And it's only for timely payments that they're reported. If you don't have a timely payment, it's not reported. So that's been really meaningful.
And is that one of the factors with VantageScore and the FICO 10T? Does that take into account, or is that a separate
It is a fact. So Vantage Score 4.0 and FICO 10T do take into account rental payments. But separately, we're also encouraging the landlords to report that rental payment to the credit bureaus.
And is there any data to support how much that can improve one's credit score? Because I mean, if you're in a habit of, and you have a track record of paying your rent,
Yeah.
that is the closest thing to paying your mortgage.
That's right. Absolutely. Don't have numbers on exactly how the scores have been improved. I have it somewhere, but I don't want to quote the wrong number. But I know it's been significant in terms of the number of people who've, actually established scores because they didn't have credit scores at all, because they didn't have, credit cards, et cetera. But in reporting the rental payments, they've been able to establish a credit score. And then for people who already had scores, it's been able to boost their scores as well. So people, thousands of people, I'm pretty sure the number is in the thousands, have been able to access things like, either credit cards or automobile loans or even home ownership. So we think that's a really good story.
So now that really addresses the equitable part, right? What you're doing.
Yeah.
There's also another recent pilot program that you launched, which talks about the third part of your vision, which is the liquidity. I'm sorry, the stable aspect of your vision. The title acceptance pilot that I'd love to hear more about how are you waiving the lender's title insurance? Can you talk a little bit about that?
Sure. So again, that initiative recognizes that closing costs are a really significant barrier to a number of homeowners, and that title insurance is a significant component of closing costs. And so what we're doing there is really saying that for certain low-risk loans, for refinances, we know that a title search has been done on the initial purchase. So for refinance loans only, we are looking to waive the cost of lender's title insurance. The borrower still has the option to go out and get their own title insurance, but title policy, but we're waiving the lender's title policy for that borrower, which will save them, on average, we say about $750. It could even go up to $1,500. So we think that's significant. That is yet to be launched, but we just announced that, I think, last week.
And now, if this pilot proves to be successful, which is too early to tell probably, do you see this maybe going into purchase as well, where maybe the same investor, the same lender, if a lender has a servicing a loan or owns a loan, and it's being sold, so you kind of have the history of what's happened, do you see either a reduced fee or a waiver of a fee if they maintain that same investor?
To be fair, I can't say that we would do that. We have not.
That'd be great.
We have not talked about that yet. So.
Okay. Perfect. So, are there any innovative approaches or best practices emerging in the industry? There's a very important data point where it shows that Hispanics are almost twice as likely to own small businesses. What can be done to help qualify more small business owners? Because we know it's always, you're trying to walk that line of, being profitable, but still being able to qualify for a loan. And the way that, small businesses are run typically poses more of a challenge than your typical W-2 employee.
Yeah, no, absolutely. So I think, we understand that documenting income is one of the more kind of important aspects, I would say, of the lending process. And I mentioned before that there is quite a bit of innovation. We have, Fannie and Freddie have both put in place certain technologies to kind of help lenders with that process of documenting income. I mentioned that Freddie's process is called Asset and Income Modeler. It sort of automates that process, and Fannie's is, I think, called DU Valuation Services. This is particularly helpful for entrepreneurs, et cetera, because it just automates that process. For self-employed borrowers, it makes it it takes away the manual aspect of things and helps the lender just walk through what documentation to collect, understanding that it's more complicated than for W-2 earners. You kind of may need multiple sources of documentation. I also mentioned cash flow underwriting. That's another important aspect that the enterprises are now considering in underwriting, because for self-employed borrowers, where it's not just a stable kind of salary you can see every 2 weeks or whatever, that cash flow underwriting is really helpful, and it gives a more complete picture, particularly for entrepreneurs. And so that would help to qualify, more borrowers. And so we really would like to encourage adoption of these services, of these Freddie Mac's AIM and Fannie's DU valuation services, and would encourage people to look those up because they're not actually as subscribed as we would like.
So now, is FHFA doing anything to support minority-owned mortgage companies?
So this is what I'd say. I mean, look, diversity is very important to us. It's something that we take into account in our own kind of employment and business practices. And as the regulator of Fannie Mae, Freddie Mac, and the Federal Home Loan Banks, we're also responsible for oversight of their diversity in their business practices. So we pay attention to what vendors they're using, and we pay attention to really trying to promote minorities, not just in home ownership, but also in the business practices. I mentioned Freddie Mac's developed the developer program. Again, that's one that we are looking at, largely racial and ethnic minorities, trying to get into, parts of the real estate profession that have, typically not been accessible to them. Freddie's developed the developer program. They had, I think it's in Nebraska, and they just had their first program class that was conducted entirely in Spanish, trying to cater to, to Latino companies. Fannie as well has been looking at, there was another program, I just forgot what it was, but essentially we are very focused on that, and we're trying to, where we can, make inroads.
Finally, what can NAREP and its members do to support FHFA's goals? Because
Sure.
we are really boots on the ground. We're doers, and the more that we know how we can support you, I'd love to share it with the audience.
Sure. I mean, I'd tell you this, but incoming is good. Like the dialogue, right? The letters, participating in the listening sessions, all of that. We like that input. It helps us to make good policy, to make policy that's really relevant, for your communities. You're the link between your communities, between buyers and sellers, letting us know what's important, and we can devise policies that really meet the needs of the community.
Naa, thank you very, very much. It was eye-opening getting to know you and talking about what you're doing. Everyone, round of applause for Naa Awaa Tagoe.
Thank you.